What's happening, beautiful people? Happy Thursday once again. Good afternoon, everyone, and welcome to the US market opening. Now it's official. NYSE is open, guys. Let's see what is happening with the markets today. US stock markets under severe pressure on Fed warning. US President Donald Trump puts pressure on Senate to vote for more stimulus. Oil prices rally before OPEC Plus meeting, and the Bank of England steps up talks on negative interest rates. This is what is happening with the markets today. Amazing market opening, guys. I'm going to show you the charts in the next couple of minutes, and you will see how the assets reacted today. Completely different to what anyone was waiting for. Now, let's touch up on the first topic of the day, which is stock markets under severe pressure after Fed warning. Now, this is a contradictory message because on the other hand, you have Donald Trump pushing for more stimulus. And last night at the Fed interest rate decision, Jerome Powell said shortly after that they will be cautious. Yeah, they will look into the stimulus deeper, but no solution was given. So the American businesses are waiting for that stimulus that comes from the government. That being said, that's why the U.S. stocks and futures are opening lower today. Now, let's see the other contradictory message which comes from Donald Trump. Hey, President Donald Trump leaned on the Republican Party to approve more fiscal stimulus in an effort to break a deadlock on Capitol Hill that is now visibly affecting the U.S. economy. Trump urged Republican senators to go for the much bigger numbers mooted by a bipartisan group of House lawmakers who have proposed a compromise stimulus package worth around $1.5 trillion. So far, the Senate has only approved $650 billion of extra spending to support the economy through the fall, while the White House has suggested a package worth $1.1 million. At his press conference yesterday, Fed Chairman Jerome Powell had again highlighted the need for fiscal policy to fill a gap in incomes created by government measures to contain the coronavirus pandemic. So this is the message I was telling you about, guys. They kind of contradict each other. Donald Trump wants to boost the American economy like he wanted since he got elected, and probably now he's targeting a re-election by helping again the U.S. businesses. And on the other hand, Jerome Powell highlighted the need for fiscal policy. Yeah, so they're not really in the same page. American businesses need a lot of money, guys. I'm sure that the $650 billion already approved by the Senate is not enough for them. That's why all this panic on the U.S. stocks. Moving on, stocks set to extend losses on Fed disappointment. U.S. stock markets are poised to extend the losses that they made on Wednesday in outrage at the Fed's failure to offer yet more stimulus candy. The disappointment hasn't yet been mitigated by thoughts that Donald Trump tweet could herald the approach of much delayed fiscal support package. Okay, stocks likely to be in focus on a day without major earnings updates include the Snowflake, which more than doubled on its first day of trading yesterday, in a reflection of how eager investors are to jump on any growth story. Also in the spotlight will be Oracle, which will partner with TikTok in the U.S. On the U.S. front. Okay, now number 4 on the board, the jobless claims. Jobless claims already been announced earlier on today. These are the announcements on the US dollar, guys. Let's make it a bit wider for you to see. There you go. This is how the economic calendar looked today after lunchtime. We had the interest rate decision from Bank of England, which remained at 0.1%. Unchanged as forecasted by economists. And we had all the announcements that came out in the Eurozone and from UK meeting the forecast. So that's why nothing major happened today, but I'll show you the charts in a few minutes and it will make more sense. Now, building permits came out red below consensus expectations at 1.470 million. And housing starts again came out in red, below consensus expectations at only 1.416 million. Also, initial jobless claims apparently rose slightly above consensus expectation to 860,000 jobs. Okay, this is what happened in the economic calendar. Now let's go back and see what happens with oil. Oil steady above 40 as OPEC plus ministers meet. This is the topic today. Crude oil drifted, having reclaimed the $40 a barrel mark overnight on the back of a solid drop in U.S. Inventories and signs of more production discipline from key exporters in the OPEC bloc. U.S. Futures were up 0.1%, trading as high as $40.12 a barrel, while Brent futures were up 0.1%, trading at $42.27. The so-called OPEC Plus block of producers will hold a ministerial meeting later to review the group's plans to gradually raise production. The plans have had doubt cast on them this week by two gloomy forecasts for global demand from OPEC itself and from the International Energy Agency. Quick look at the charts, guys, and let's see how the U.S. markets open today. There you go. You can see oil had a decent rally today. I'd say it pushed a bit higher, just above the $40 mark. And just before the U.S. opening, it literally threw away all those gains. It's currently trading at 39.85 with a lot of uncertainty in the markets, with the RSI and the stochastic not being able to provide a clear direction for the price. Euro, on the other hand, started the morning on a positive note, went sideways again with a lot of uncertainty, and now is continuing, is pushing to the negative side, as we see here, currently trading at 117.99. with the RSI and stochastic both pointing downwards. So we might see the euro losing a bit of ground today. Let's move on to the pound. The pound didn't have such a good day. It dropped for about 4 hours from what we see on the charts, and now, just now, is trying a shy correction, currently trading at 129.06. The RSI is pointing downwards, but the stochastic is still pointing down upwards, and the stochastic is still pointing downwards, creating a bit of confluence between indicators. Let's move on to USD JPY. The US dollar dropped today against the Japanese yen and started picking up just before US opening, currently trading at 104.72 with the RSI and the stochastic way in the oversold position, indicating potential strength for the US dollar. Aussie dollar, just like gold, continued the losses today against the US dollar. Okay, the Aussie dollar is currently trading at 0.7289, and it's still pushing lower, looking at the indicators at the bottom. USD Canadian is strengthening, or has strengthened a bit. It's currently standing at 132.16. Okay, probably after 20-30 minutes after the market opening, the price will settle a bit, choosing a direction. Now it's very, very undecided. Now, let's have a look at the S&P 500 and the Dow Jones. Wow. Look at the gap, guys. The market closed at 33.86 last night, and today they opened way lower at 33.39, losing about 50 points. 50 pips at the opening. Very, very choppy trading, very bouncy trading in the last week for the S&P 500 and the Dow Jones. Also opening lower and pushing to the downside, with the RSI and stochastic pointing downwards. Moving on. Let's have a look at the US dollar index, which again dropped a bit from the EU opening, went sideways for a couple of hours in the afternoon and opened on a positive note today, very likely boosted by the Fed message. Gold is currently trading back down at 1941, and by the looks of it, it's gonna go even lower, guys. It might even reach the 1930 level. okay, or below. Yeah, you can see the speed that at that gold is dropping as we speak right now. Okay, incoming news: Wall Street opens sharply lower on Fed gloom. Dow Jones down 350 points. Very big drop for the Dow Jones. Right, now let's have a quick look at silver, guys. Silver again is literally copy pasting the movement of the gold chart. Currently trading at 26.56, and by the looks of it, heading lower towards the 26.22 level. Let's see if that will happen. Brent as well did well in the morning, then it pulled back a bit just before the American opening, and now very, very undecided. It doesn't know where to go. We can look at the last candlestick, guys, and we can see it literally looks like a cross. Yeah, there's no buying power, no selling power. Nothing is happening. Brent oil is currently trading at 41.98, yeah, 2 cents short of the 42 mark. And now your favorite, guys, Bitcoin. Bitcoin is still trading at 10,806 after reaching a high of 11,090, okay, a few hours ago. Bitcoin is in a downtrend as we see it right now for quite a few hours. Let's see what will happen after the markets will settle a bit. Will Americans buy more Bitcoin? Will people around the world buy more Bitcoin, pushing the price back up towards the 11,000 mark? Let's see. As things stand right now, at least for the next few minutes, it's unlikely. Bitcoin is currently trading at 10,806, and it's targeting the 10,737 level. Okay, with the RSI still not in the oversold section. Now, the trivia question of the day, guys. The trivia question of the day. What is the impact of negative interest rates on the economy? Because this morning I asked you about the zero interest rates. I got a few answers. Now, let's see if you know this one. What is the impact of negative interest rates on the economy? This is the question. Type your answers, and I will come back to this in just 2 minutes. Okay, right. Now, let's move on. Let's see what happened with UK today, as they had the interest rate decision followed by a press conference. We see that Bank of England steps up talks on negative rates amid uncertain outlook. Right, there is the article. Right, so the Bank of England will step up talks on negative interest rates as the economy enters a period of unusual uncertainty. Well, no doubt about it, with the COVID pandemic and along with the latest announcements coming from UK regarding the Brexit, okay, no doubt about it, we have really unusual uncertainty when it comes to UK. Right, policymakers led by Governor Andrew Bailey voted unanimously to maintain their key interest rate at 0.1% and asset purchase target unchanged at £745 billion, which is $966 billion. But they also said they'll hold structured engagement with the Prudential regulation authority later this year on how sub-zero rates could be implemented. Wow. So the question today, about negative interest rates affecting the economy relates to this. Very, very soon, guys, we might see negative interest rates in the UK. By the looks of it, the pound slid to an intraday low, trading down 0.6% at 1.2892. Officials said that while recent data has been a little stronger than expected, they still think there is a risk of more persistent period of elevated unemployment than in the central projection. Wow. Okay, so finally, the officials are acknowledging that UK might have a bigger problem that they thought. Right, so let's try and end up. Right, so the UK is facing a resurgence in virus infections and restrictions, as well as fears unemployment could spike when government aid programs are withdrawn next month. At the same time, Prime Minister Boris Johnson, the European Donald Trump, threats to withdraw his Brexit deal with the European Union could scupper any chance of a trade accord before the deadline, which is December 31st, further boosting economic turmoil. Right, a very, very foggy period for UK starting now, basically, with lots of events on the calendar, lots of huge importance events to be discussed, and lots of negotiations to be held. Right, and now the answer to the question, guys. The answer to the question. You're very shy this afternoon, I see, or you just simply don't know what is the impact of negative interest rates on the economy. Right, the answer is not so complicated. Basically, negative interest rates have as their main purpose boosting the economy and forcing, in a way, people spending money in the country. This is what happens on rare occasions. It's a very unorthodox measure, but you might have negative interest rates in UK very, very soon. So far, the countries that have negative interest rates, we saw Japan earlier on holding the negative interest rate at minus 0.1%. And we know Switzerland, guys. Yeah. Why Switzerland? Why Switzerland has or had a negative interest rate for so long is that because all the money or most of the money around the world goes to Switzerland. Okay, business people are trying to park there a lot of money. And the country basically says, right, enough. We have too much money in storage. Right, it's time for you guys to either pay for the excess, to clear the excess of money, or just take your money somewhere else. This is what is going on. Yeah, the banks literally have an overflow of cash, an excess of cash. So when a country decides to, the central bank of a country decides to move the interest rates into the negative, then basically they're saying, right, you have too much cash parked in the banks. Either you spend it, you give it to the people, you do something with it so we can boost the economy. Yeah, otherwise we will get at the dead point. So this is the impact of a negative interest rate on the economy. Yeah, even though it's a bit of an unorthodox measure, the central bank in the country is trying to force people in a way to spend money, to stop depositing money. This is how it works. Right, this was it for today, guys. Again, join me tomorrow morning for the Europe market opening. Let's see what will happen overnight with all these lovely assets that sometimes bring us tremendous profits. Sometimes they bring us tremendous losses. Okay, it's all about keeping the situation balanced. Okay, this was it from my side. Remember to like, share, and subscribe if you like our broadcast, guys. Support us in delivering more quality content, and join me tomorrow morning at the the Europe market opening. I'm getting confused with all these market openings. So until then, remember to trade responsibly, and may all your trades be in the money.